focus to another listing of the day. Kisht got listed on the bourses today. We now have the management to understand the outlook for the company over the next 3 to 5 year period. Mr. Ranveer Singh, co-founder and CEO of the company, is now joining us. Mr. Singh, morning, and first of all, congratulations on getting listed on the bourses today. IPO proceeds are largely being infused into the subsidiary. How much growth can this capital support, and when might the company need additional capital raising in the future? If you can take us through the plans going forward when it comes to your subsidiary.
Absolutely. So 75% of the capital is getting into the subsidiary. This is to support the future growth. As you know, we are doing that to ensure that we have a very healthy capital adequacy ratio. So we expect this will support our growth in a very prominent way for many more years to come. And the remaining 25% of the capital is also supporting the growth, but in a very, very indirect way, which is the investments in AI, machine learning, other technology infrastructure that we are investing in.
All right. Hi, Mr. Singh. This is Shrishti also joining in. But since over 94% of the AUM is unsecured, how confident are you about the asset quality during economic stress? And what are the trends that you are already seeing in GNPA, collection efficiency, and provisioning coverage across recent borrowers' cohorts?
So just to tell you, we started secured only 2 years back. So if you go back to the history, the unsecured was 100%, the same 94% was 100%. And yet, if you look at our risk performance across any metric, be it GNPA or credit cost, it has only improved. And I don't see any reason why such capabilities being built cannot deliver in future.
And Mr. Singh, do you expect the mix to shift towards secured lending going forward, if there is any change that you are expecting?
So absolutely. So if you look at, more than me giving any future numbers, which of course I'll refrain from giving, but more importantly, if you look at our DRHP and the RHP, during the course of mere 9 months, the share of secured moved from 2.4% to 5.8%, which is the 6% that you're alluding to. And this is at a time when the overall book has grown almost at a rate of 79% per annum. So this is a very, very healthy trend, and I will say the historical trend is something to go by, and we feel really, really great about the lab business that we have built. It's a very strategic initiative for us. This is not one-off thing for us, and we'll continue to have a good focus area on that.
All right, and as digital lending regulations evolve under the RBI, what key compliance or regulatory risk management do you expect over the next few years, and could they materially impact growth or margins?
So first of all, I should recognize that RBI has been a true guardian of honest and fair play in Indian financial ecosystem. Not only that, I think there are a slew of measures taken, be it digital lending guidelines, be it guidelines on FLDG, which has only supported the ecosystem to be far more compliant, far more evolved, and to build in a manner where it can really scale up to a different level. I think because, as you know, I have an NBFC, which is a 100% subsidiary of the holding company, we are duty bound to be supremely compliant in all those aspects. And I don't see any reason why that reality should change, even going forward.
And Mr. Singh, company has also shown strong customer growth with 63 plus million registered users. What percentage of customers are repeat borrowers, and how is the customer retention for you?
Yeah, so I think you're asking suffused in this many questions, but we have provided a number. 50% of our customers today are repeat customers. Yes, we have seen a very, very high growth, not only in terms of the registered users, but the people who I could give loan, which are basically the unique customers that we have served. They continue to drive a very strong loyalty with us, and which will be a big driver for the repeat customers. I don't see that changing at all. Secondly, as far as which specific segments or geography which are driving growth, I should tell you, being a digital lending company, we are geography agnostic. But as the growth centers in India evolve, mostly the urban growth centers, that becomes the drivers of growth for us. And I would say that will be the most prominent driver for us to seek growth in specific segments or specific geography.
All right, but in a highly competitive fintech lending market, what is your biggest competitive advantage in consumer acquisition, underwriting, technology, and cross-selling compared to your peers and traditional lenders as well?
So let me lay out very clearly, there are three distinct advantages which has not only helped us grow to this level, but we continue to believe these are the areas where we can further scale up. First and foremost, our ability to manage risk, which basically starts not only from the underwriting, but the models that we use, the AI, ML models, not done it on a small base, but done it on an 11 million customer base, plus whole host of other infrastructure which is particularly around collection, basically around risk management, because that plays directly in the way you can serve the customer, you can give an approval, the amount you can offer, and so on and so forth. That's number one. Number two, our ability to acquire customer through a very diversified set of channels. So for example, though we are a lending company, but digital marketing, which becomes a source of acquisition for many people, has less than 50% share when it comes to acquiring our customer. Last but definitely not the least is the large customer base that we have. If you ask me, they are our true value. As I mentioned, 11.2 million unique customers. These customers have a huge lifetime value. They have shown a loyalty with us in terms of coming for repeat, in terms of taking other products that we have, be it loan against property or be it non-lending product that we offer as a distributor. And that's the third distinct advantage which we believe keeps us in a different league.
Understood. Mr. Singh, thank you so much for taking your time out and joining us here on ET Now and taking us through what the strategic roadmap for growth could look like over the next few years. Thank you so much for joining us today. The stock, remember, listed at about 11% premium as compared to its issue price at 190. The stock is now sitting the stock should come up for your new screens. That's ONEMI Technology Services. But market in the meanwhile is sitting with a cut. 0.5% decline on the Nifty is what we are seeing. We have Nifty IT index that is standing out in an otherwise weak market. So IT index is standing with gains of 0.8%. Nifty banking index is also down 0.8%. So clearly we are seeing some bit of strength coming in from IT stocks, but otherwise it is turning out to be a weak day in line with what most Asian markets were doing this morning. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Buy now, sell now will come up next.